Microphone check and screen share check, please. Okie doke. Can you see the 10-day look back? Is that showing on your screen there? I'm gonna assume that it is. Oh, let me try. It's showing the wrong screen. Hold on. Let's try that again. Not sure why that was the case. Share screen. All right, how about now? 10-day look back. Okay, excellent. I will get started then. So this is the Nightly Strategy Podcast for October 11th, 2022. Whoops. Come back here, screen. That was strange. All right, let's take a look at what we got here. So this is the 1-day look back to here, 5-day look back to here, then the 10-day look back to here. So this is all on 30-minute charts. This is the size of the range of the last 30 minutes. So today opened up with a bit of a gap down, harsh sell-off, an intraday recovery that was a tradable move on the intraday, but then it could not get through this cluster of resistance here, and rolled over for a very weak close. So it had like a fake one and go two, and then faded two to here. And just a moment. I'm sorry, I didn't mean to yell into the mic. I forgot we had the mic on, so we're back recording. Yeah, so this was actually a pretty negative sign for the day. The fact that there was some tactical buying pressure, but at the first opportunity they just cut and run, and there was no support, and it sold right off in 356 now. So this is bad. This is not good. Uh, if we look at the daily charts, looking back 30 days, all right. So here's our 1-day, 5-day, 10-day, 10 to 20, and then 20 to 30 day. We can feel that downward pressure really highlighted by the RL10 rolling over and dropping down. And today, price really testing that PSAR. And one more day like that, and we're going to get the RL10 break below the previous belly of the RL10, and that will be a confirmation that it's doom and gloom all the way to the election. There's just no end in sight on this. So the downward bias is in full force. There are certainly some intraday opportunities. There is some tactical buying going on, but there is no evidence of willingness to hold positions on the long side overnight before the election. So make your plans accordingly. When we look back at the 150-day look, you can see that really clearly. So here's the 30. This is 31 to 60. This is 60, and so on. And you can see that we are deep in Godzilla territory right here. With we're pushing the bottom 2% of the trading range for 10 days, 30 days, and 150 days, and the size of the 5-day volatility is enormous. So this is pure Godzilla territory where the market is uh, tearing through people's accounts right now. Let's take a look at the sector performance. All right. We have our baseline S&P right here, off 0.63. The improvements were in diamonds and the small caps in the U.S. at 0.03, so actually above the zero line for actual making money today. Treasuries 0.44, but still below the key price level of 100. The 2 weak areas, technology minus 1.37, emerging markets minus 1.6. Um, just as bad as it can be. Let's look at the underperformers across the board now. Again, S&P baseline at 0.63. So we get clean energy, 0.73. A cluster of the XL series here, that's materials, energy, and consumer discretionary, 0.8. Finance, oil exploration, blended energy, or blended commodity, I should say, and the tech sector in the S&P, down to 1.5, along with Bitcoin between 1.1 and 1.5 in that cluster. ARC Innovation 1.8. Brazil Ethereum 2.5. Oil 2.75. The FANGs 3%. Ouch. And then marijuana another 8% off the top. Dashing a lot of pipe dreams, if I can say it that way. Individual companies that perform poorly. So Squarespace, 5.5. Tesla, minus 2.9. Coming down towards key support at 200. Still $1.50 on the R10. It's 5-1 on a test of the return to the 10-day high. So it's getting into value territory there, some would say. Alcoa, Cliff, in our metals. With Cliff at 1.5 and Alcoa at 2.5. Got Devon Energy, our trader, 2.5. Texas Instruments, 2.1. And then our other two semiconductor sector here, it's really NVIDIA has been the strongest of those three, but really not much to choose from between them, if we're being honest. Apple was off 1%. Robinhood off 0.75. Microsoft and PayPal, no rest among the wicked there at 1.6. So a wide variety of what had been market leaders on the last run up are all just getting slaughtered right now. All right, what was better than the S&P today? Starting with our sectors first. ARC Genomics, wheat and precious metals, agriculture, wood, and the Aussie dollar, all between minus 0.5 and flat for the day, with the S&P here, our baseline at minus 0.63. Emerging markets in the other lumber at 0.24. Biotech, oil exploration, uranium, retail, residential real estate, and the VIX, commercial real estate, 2.4 to 0.77. So this is not; these are not leadership areas, right? These are not things that you normally associate with growth. These are kind of defensive plays. Lithium for batteries, consumer staples, raw materials for energy with uranium, the two real estates, and the volatility. So that's really alternate leadership right there. Um, Individual companies, Coinbase and Rivian, recovering from pain and suffering from last week. U.S. Steel, that was the other strong play today. It was much better than their partners, Cliff and Alcoa. So U.S. Steel is the play, and pretty much that's it. That was there was not a lot to choose from at all today. Take a look at sniper trade of the day. So U.S. Steel was the play, and it was strong right from the after the initial gap down. So let's look at that. So here was the close yesterday, and it leads to a gap to here, which then sold off, recovered, and then fell back to the opening. So that establishes an OR3, opening range 3, right here. So we're ready to go on the break in either direction with a standard risk box. And in this case, it broke out to the upside. So that's our opening range 3. And now we'll break out with standard risk. We would be looking to get to the top of the dragon up here as a initial target. It gets interesting if it can break out above the PSAR and really go. So that makes this whole region between that target and the opening, this whole region in here is really just a tactical trade. And all I'm trying to do on that one is take advantage of any upward motion up into here as soon as I can. I'm going to want to try to get my stop from here up above my entry so that I can lock in some kind of gain and call that no lose plus dinner for 2. And then it's a science project to see if it can get up to resistance and then through it. So that's all the tactical, my risk out of there, and then to see whether or not there's actually any juice on this at all. So it's a pure science project at that point. Check or hold. All right, so let's see what transpired. We get a pretty strong move right off the bat. With this thing going straight up. Actually, it comes over here and starts going up. Goes right through the PSAR, goes right through the top of the dragon, rolls up into here, and now starts rolling over. As that starts rolling over, I now have to decide, if I haven't already moved it, where is my stop going to be, right? So price has now pulled back to here. It's rolled up and over, and I get to decide where to put my stop. My initial stop was here. If I have it at the PSAR, then my stop would be here, obviously. And what I would be doing is willing to capture that much reward versus that much risk. And if I do that, then this entire piece right here is market's money, or I'm giving it room to run. I don't like that. I think that's too much, and especially because the size of the wrist box. If I go from the top of the candle, um, that's about a trailing stop. So if I got a 1 hour trailing stop, I got to pretty much have my stop right about here, which is just below price. If I went to where the PSAR is going to be, well, the PSAR has already flipped. So if I go spine of the dragon, belly of the dragon, I could think of that as 1, 2, 3, or 4. Any one of those moves, any one of those exits preserves the gain. So the question is, where do you want to put your stop? 1, 2, 3, or 4? Stop was at 1. I'm happy to take that exit because I gave it one wrist box to play with. I notice now that the RL10 has rolled over and crossed the baby dragon, and I'm coming back to the edge of the dragon already, which is, if we look on this chart, the dragon is right about here. There's his spine, and then here's so that right there's a. So I'm already getting ready to get back into the noise buffer anyway, and I certainly don't want to let it come all the way through the dragon. There's no way I'm going to let this thing come through the dragon and then just try to lock in that little piece. So the edge of the dragon is not bad. If you've got more than an R in hand and it's had that nice kind of run, you're never wrong by getting out at the edge of the dragon. But in this case, I just took the 1R give back, and now I'm out of that position. Check or hold. Uh, about 2R, roughly. About 2R. It comes all the way back to find support with the RL10, right where it did before, and then starts running right back up. And now it starts peaking right here at the top of the dragon. Now, the last time, price peaked here before it rolled over. So I'm already feeling like this thing is starting to get weak. So I'm not interested in buying it right here. I am not interested in buying. I want to see it get through the PSAR because it already looks like it's stalling to me. But then it recovers, takes out the PSAR. I put the standard risk, and it immediately sells off. And by the time I can hit the sell, I get this fill. So that's a -1. So this one was +2 and a -1. So we're at about +1 right now. Check or hold. It reverses immediately, comes back up through the PSAR, and I am noticing this formation here. We got a swing low, a higher low. So what would we call that entry? And I'm using the standard wrist, the same wrist box on that one. What would we call that entry? We would call that a Kata 2 because we had one successful move already, and then we got the higher lows, the RLXD and the taking out the PSAR. So this gives us the entry right here with the standard risk box. And it starts getting interesting if it can get above this previous peak of the RL10. That's when it. So there's not much tactical trade in here. You might even say it's got a. I'd love to see it get a new high of the day. It gets interesting above the new high of the day. We could even say that. So we'll see what we get here. And it's able to get through the previous high of the day. And that was accompanied with that little R10 wiggle right here. So that's actually a pretty good sign. This was an opportunity right here for a second position. But I was not really impressed with all this weakness in here. So I was content just having the one in play. Now that it has peaked here and prices come back to here, and my entry was here, and my stop is here. Now the question is, where do I put my stop? If I'm using just the P-Star trail, I'm right here. If I use the bottom of the dragon, I'm right here. If I just take this now and say, you know what, that's a pretty good exit. That would be an exit at 1. We'll say the belly of the dragon is 2. We'll say the P-Star is 3. If we go to this like little swing low here, giving it the maximum room, that would be 4. And that would really be the, you're locking in 4 is a no-lose plus dinner for 2. You're keeping a fraction. But you would have given back, you notice now, if you do that, you would have given back this much retention. That doesn't feel correct. So, 1, 2, 3, or 4, where is your stop? See some votes for the belly of the where the piece are. So keep your own score right there. And it turns out that the PSAR, from this moment here, just gives you a nice exit. If we'd gone with the skin of the dragon here, that would have still, both of those positions, both of those exits would still keep us in for this much. And then by the time you get out here, the skin of the dragon would get you out there, the PSAR gets you out there. That's pretty much a good exit, if you see that. And what you should notice is that this thing failed a little bit, failed, failed, really couldn't even break to a new high and starts rolling over. That should clue you that it's just about done. It had almost 20 minutes in here to make a new high, and it really couldn't. So that feels like a pretty good exit. That's 1 unit of risk. That's 1 unit of gain. That's about another +1. And so we were +2, -1, and +1. So we're at +2 for the day so far. That's probably dragon horns if we had the full RLC on it. It has the same kind of feel for me, and the reason I say that is the fact that this already had that little R10 fail right there and penetrated the dragon and then went back up and then couldn't and starts failing again. That's telling you this is just about all there is. What would we call this entry? Yeah, we got a low, higher low, higher low, higher low, PSAR flip, and up we go. Standard risk. Now, you could take the whole standard risk box, but to me, you got to get out at the belly of the RL10 anyway, right? Anything below here is a CD. So there's no point in letting price penetrate in here and hoping that it'll somehow reverse before you get a full 1 hour loss. In this case, if this rolls over and hits this, done. So you've limited your risk to about a 0.4, to be honest. And just trust in their little PSAR gives us a fraction. But again, you can see that this whole enterprise here is just running out of gas. Both of those failing. That's just running out of gas. I wait for basically a collapsing dragon here. The PSAR flip would have been here, but I wanted to respect that first move. I wanted to get the extra confirmation of the collapsing dragon on the first one. Here's my risk box. You know, in retrospect, that's, oh, obviously should have just taken that and trusted the PSAR. Well, not obvious at the time. So I take the collapsing dragon. Standard risk. Quick scratch. I tried the Kata 2 on this one. I looked at this as holding, holding, and said, you know, it had an opportunity to fail and it didn't, so I tried this one as a Kata 2. It failed right away. So now I take this as a stop and reverse. So this is about a, you know, minus 0.2. This is about a minus 0.2. We're back into this thing now on a Kata 2 collapsing dragon standard risk. Checker hold. That one pays off big time. I take the edge of the dragon because we're late in the day. And that little edge of the dragon is right here. That just felt good enough. So there's 1 unit of risk. So 1, 2. So if that's about a, you know, a minus 0.5, and this one pays for the commissions, and this whole thing netted out to plus 2, that gives us about 3.5 for the day so far. And I think that's all there was. Yeah, I missed that last half hour is interesting but kind of irrelevant. Noise. Although in that case there was a tradable move in that last half hour. I just didn't take it. Right. So sniper trade of the day. Let's see how the team did today. right, so Woj comes in with a nice scratch after being well in the money, almost plus one. Lets us come all the way back to .1. This one was almost plus one, comes back to scratch. So we got to be a little better than that. When you get past an average win, don't let it come back just to no lose plus dinner for two. Try to figure out how to get another .3 out of that. Like if you, the SSC crushes it nicely. So for plus two, stop trading here. You're supposed to tell us that because the caught at two, then we could trade. Tesla couldn't get out of his own way. This was just right now. Tesla is in a funk, and this little when you start seeing that right about there, you need to just stop that. That -4 was just painful. That's overcommitment. Sometimes that'll happen. And then with XRP, oh, quick scratch, missed the re-entry. Oh my gracious. And then a second position. Oh my gracious. If you get a move like that, take half the bar. That should have been like +5. And then the PSAR flip. Oh. Quick 1 hour loss and then a 2 hour gain. So we still come out of that with +1, but it should have been about 7. Or could have been about 7, let's say it that way. Let's say that properly. And then getting a couple. Oh, dude. That re-entry is the key to sanity and profits. And then, but still brought in 2.2, and even with the horrible Tesla, the chop in Tesla still came out net positive. That's good shooting. Luke with the Aussie dollar here. Pardon me. Starts trading here, sees the high, lower high. I would call that a COTA 2. There was an opportunity for a second position here. If you take it and you see that kind of move right away and it starts coming back, you got to take it right there. He doesn't take this one, so he actually has a little bit more room to let it play out, and so letting it come back to here doesn't hurt him. He still would have made money on that second position, but this little that thing happened pretty fast, and then there was just no more follow through. I like the effort. I like the stop and reverse a couple times, and still got paid. And quick scratch, and 6.4. And that's with not especially, aggressive play in here. I mean, if we wanted to be really aggressive, we might have come over to the collapsing dragon here off of the RL10. We might have come to the belly of the dragon here. We might have played this CD. So there were really 3 places where that 6 could have become 9. But still good to see you back in the saddle and taking your measured risks and getting the most out of the one position in a calm manner. That's good shooting. All right, to the daily report. All right, dashboard 1 drifted back into bearish normal from bearish volatile. Still just as bad as it can be. It just didn't sell off as much as it might have, but that's faint praise. Still abnormally risk off. Um, the volatility just keeps teasing us. It doesn't want to do this, and it hasn't done that yet. Just the chop is making people lose their mind. But if you're just patient and take what it'll give you and don't have a bias, you sleep well at night with no overnight risk. Let's take a look at some key information here on the max pains, the guys that are the most from their 10-day high. Tesla, Nike, Intel, Microsoft. Those are our heroes, and they're getting smoked. McDonald's, Walmart, and the staples could do worse than that. Dow Tactical, lots of 5 days down today. It's that kind of market. All of those, if they fail tomorrow, you can be instantly short them. Plus, any of these that are on collapsing price structure, they took out the 6 month support level, all got smashed today. Walgreens, Walmart, Johnson and Johnson. Just those are your staples, your defensive plays. Lots of auto framers. The ETF's kind of the same boat. Collapses here in emerging markets, in technology, the Qs, and in the S&P tech. Lots of auto framers to choose from. So don't fight the tape. Be in second position and let it pull you forward, either up or down, whichever way that is. Auto framer for standard mechanical framing. No squeezes today. Everything's larger than its average range. Shifting to the snipers. Tons of snipers for the Godzilla. And I really like the double greens because these are the ones that are failing as we're watching them fail. The ones that are green and pink, these are sleepers, where the 5 period, like in Microsoft, large 5-day Z-score for volatility, but a relatively small 1-day. So could be a turning point, could be the doji cause to further crush. So what we mean by that is there's a large 5-day down range, but the size of the 1-day range is very small, but the size of the 5-day range is large. That's where you get this kind of more than 2 standard deviations of 5-day range and a very small 1-day range. So this sets up a critical state, either a recovery or the next leg down. So that makes this a critical state. You have a Godzilla that's a green and pink. That is an absolute critical state in all of those. So you got a dozen possible setups to investigate if you find that attractive. Inside the tactical symbols, we have that very same setup in Microsoft, Nvidia. Real estate is enraged, and Ethereum is, quiet on the 5-day and the 1-day, but still in Godzilla land with just horrible price structure. So lots to choose from just from that screen. The 1-day movers, that's a 5 sigma move in Amgen and VTRS. Win casinos, that manic depressive stock, it's in an enraged state. The most volatiles are the ones I'm more interested in right now because they're moving in front of our eyes. There's your auto framer stats from TC2000 for auto framers. And the sniper stats for tactical symbol set. You can see we still are being dominated by the spring and the winter below the line there in the MACD Four Seasons, but a few sneaky summers creeping in there. All defensive plays plus Brazil. The multi-time frame index is that's the tail of the tape. That's telling you what this is like. P for pain, P for plenty, plenty of pain. But even the energies that had been relatively good got smacked today. Brazil and Latin America, which had been pretty good, even they had their turn in prison, getting smashed. Only consumer staples had anything like a day in the ETFs. Walgreens, Johnson and Johnson, McDonald's, and Walmart. Those are all members of XLP. I'm sorry, of XLP. All your consumer staples. That's where that strength is coming from those three guys. That little 2 day surge. Remember this little 2 day surge. That was the best 2 day surge since 2020. Crush. That's the sound of hopes and dreams being crushed. And the RL30 slope is rolling over, getting ready to cross below its 10-period moving average. Ouch. If this collapses, man, look out below. And this is the percent stretch away from the 200. That's ready to collapse big time. All right, that's everything I want to cover for today. We'll get this published and posted, and tomorrow I'm going to go talk to our Chamber of Commerce, introduce the tortoise to the local community, try to encourage them to help support our soccer initiative for building leadership in our youth. I'm really proud of that program. We were able to play soccer all the way through the COVID era when almost every other opportunity for social life for the kids was gone. Schools were shut down. Other recreational programs were shut down. But we were able to play soccer all the way through and just handle the COVID. And I'm really proud of that. I'm going to make that point with our local businesses tomorrow about why they need to get behind us and help us grow. All right, that's everything I got for you guys. Take good care. Oh, hey, just while we're here, I meant to say something on this. Take a look at the volatility of the slope. This is COVID right here. And this is what the oscillation of the business cycle looked like. It just looks like this. COVID happens, and now take a look at this expanding volatility in both directions. This thing is getting larger and wilder and crazier. So you have got to be able to trade volatility and be ready for those amazing runs and brutal turning points, or this market is just going to shred you. You can see when you come down into here, how that oscillation is getting larger and larger each time. That's increasing volatility, and it's brutal. So that's what I wanted to remember to tell you. Currencies are doing what they always do. They tend to smoothly move. Their volatility is increasing, but it's still like ocean tides. They're not correlated. They go in and out of correlation all the time, and you really should trade them separately. The complexity of trying to do intermarket correlations is beyond the human comprehension. You can do it with neural networks and artificial intelligence, but it's really a pair trade, and you're better just to trade the trends you see and isolate for both of them. So if you're trading the currency trends and you're trading the equity trends, you're getting the trends instead of the blended equity. That actually narrows the size of the moves, and so you have to take larger positions, and you don't want to do that. You really would rather trade those two trend lines separately because the currencies tend to last, the trends tend to last a lot longer, and what we're seeing is these little 2 and 5 day trends are so sharp in the equities that the currencies don't give you a hedge against that. It's better to trade them as two separate packages. Okay. All right, that's everything we got for the day. Check or hold, and we'll see you tomorrow.